Yo, 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 what's up, my young visionaries? How we doing today? Welcome back to D's Daily DD. If you don't know, if it's your first time stopping in, that's the name of the channel. Thanks for coming back, guys. I know it's a holiday weekend, okay? So we're gonna move along here because I know everybody's busy and has stuff to do, okay? So I'm not trying to waste a lot of time here again. That way we can get straight into the information and the things we need to pay attention to. And also remember, that you don't want to trade on emotions. I hope you weren't trading on emotions today, because a lot happened today that made it seem like it was bad, right? But in reality, it's just following what it needs to do, okay? Now I'm talking about charts and all that, okay? So we're gonna go over AMC, we're gonna go over Lucid, we're gonna go over Bitfarm, and then Loopring, all right? And I know Loopring's having a great day too, guys. Like, it just went off, okay? So we'll talk a little bit about that. Okay, so first let's dive into this information here with this little trading strategy I want to show you guys that I use once in a while. Okay, and again, not a financial advisor. These are just strategies that I use and I've tried in the market. Okay, so let me make this full screen. Okay, so you have to know and have a little bit of knowledge on options. All right, so the way I trade options is I buy them and I sell them. Okay, so that's how I do it. So what you would want to do here is, like, let me explain what's going on here. So we have your chart. Okay, so I'm just giving an example. There's no specific stock or anything, but let's just say the share price is around $50. Okay, so you have your shares here. Okay, so you're gonna have out of your 100% of money, you're gonna buy 80% shares, and then you're gonna put about 20% into a put option. Okay, or however many you want to buy. But what you want to do is take advantage of the volatility. All right, so this is just, to protect your shares in a way. This is to take advantage of the volatility. And the way you can use options in a way is to think of them as insurance. Okay, so what I mean here is, okay, you're here, but the price is going to move up and down. But say the price goes down to 30 and you're losing money on your shares, right? So when you buy puts, guys, I'm about to blow your mind, okay? But with put options, you make money, your value goes up as the stock price goes down, okay? So if, as the market's going down and you buy, how you have put options, the price goes up. You make profit, okay? That's what I'm trying to say. If stock price goes down, you make profit, right? It goes up. So what you want to do is use those put options as insurance, okay? Because if you're saying, okay, I'm long on this, like, it's October right here, and then December and March, right? So you're talking about a 6 to 8 month window or so. But you're saying, okay, I have these shares at $50, but I think they're gonna go over $100 in a year, right? I'm gonna sit on these shares. But in the meantime, while the stock is going up and down, you buy these as insurance, and then you get, it's gonna take more money. Of course, you have to buy the put options, and they're different prices, depending when you buy them. But you're gonna wanna, sell them, get rid of them right here. That's what I do, right? So I wait for the volatility, the price to go down, and that way, if the price goes up, I'm making money on the shares. If the price goes down, I'm making money on the put options. Okay, so yeah, I just wanted to show you guys this, right? So here's the out of your money that you're putting in, and you're long and you're bullish. This is a bullish strategy. Okay, this is not a bearish strategy. All right, so I just wanted to show you guys that real quick. So first, we're gonna actually dive into AMC. All right. And let me open up the chart here. So yeah, this is AMC. Okay, guys, let me show you something right here, guys. Okay, so I've talked about short attacks, right? And in my opinion, this is a short ladder attack because they always have the same pattern, right? It's weird how it's like these three legs. So you got one and then a bounce, right? And then two and then three, right? I'm going to show you a different stock. Guess what it is, right? So we normally trade with these stocks, right? And how come all of a sudden we're not? Look, 1, 2, 3, right? GME. Weird, right? Different prices, different amount of shares and whatnot, the pool, and look at how weird, right? Oh, now we trade. Normally we trade, but these past green days when they had 10% days GME and whatnot, we didn't follow it. But today we followed it pretty much to the T, guys. All right, so if you're trading on emotions, this does look really bad, right? But we don't trade on emotions, okay? We have to zoom out. When you're in doubt, look at what happened. So I want to point this out. So I ended up, moving this triangle. I extended it, and I like to use the bodies, all right? So I don't like to use the wicks. There's more price action. For my research, it says that if it's better to use the bodies. So you want to have as many touch points as possible. So usually 3 or more, okay? So 1, 2, 3 are my touch points, and then we're right on track, right? So I got as many touch points as I could right here. 1, 2, 3. So you know we're right on this support, right? So we want to bounce and finally break this. So we're gonna move this, right? Just to show you, you know, why I like charting so much. I'm gonna draw another one. Trend line from there to there. Okay, and look what happened. We're right on the line, guys. That's crazy. That's just showing you, right, what's going on. And then one more. Let me zoom in a little bit more. And another trend line. All right. So now we want to get this bounce, guys, and we need to see volume, right? So I've been saying it. How are we going to get this break, guys? We need to see volume, okay? You know, they have more shares to short with, right? So if you look at the right here, right? So yesterday they had, I think, 5.2 million. Now there's 4.8 million. All right. So they borrowed some and they were sitting on some, probably that's what I'm talking about. What this is, okay? Right here, the drops that you see right here, okay? Boom, boom, boom. And I'll show you why as well. Look, we have to pay attention to what's going on in the background, guys. Okay, so look, I'm gonna show you. These are the AMC institutional owners. Okay, these are the buys, right? So these are recent. As you look at the date, these people, the white ones are the people that are holding, or the companies, institutions that are holding. The green ones are new positions, right? So they just added 18,000. They just added 13,000. They just added 127,000. Okay, let me show you this. There's this Bank of New York. Look, they're holding 2.3 million shares, guys. You really think they're here to mess around? Like, you really don't you think if there was in risk like that money, they would unload it, right? They would sell? No, right? Okay, so then this is all in this month, all right, guys? So all these institutions, these banks, nationwide insurance, guys, 51,000 shares, okay? Pay attention to that. That's also information you need to pay attention to. Right here, I'm going to show you, these are the puts, right? So there's a lot of institutions that have closed out their put positions, guys. Look, red indicates closed positions. Green indicates new positions. Why is there all these companies, these institutions, you know, closing out their put positions, huh? Right? Something coming? I think so. What else? Yeah, so there's only 5,000 calls in the money right now, guys. That's pretty sad to see. And this doesn't change, right? They have 4.8. Even though they borrowed more, the rate hasn't changed. Doesn't make sense to me. Calls, guys, only 5,000. This is the gamma squeeze potential we've been talking about, guys. These are the ones that expire worthless. You know how much money the institutions or whoever, the market maker, whoever wrote these, right, is making there? And then 19,000 in the money. Now, okay, the Motley Tool. Oh shoot, I mean the Motley Fool. I thought that was a T. My bad. You know, they put out this bearish article. I'm not gonna go over because it's not gonna show you the information in the middle because it's just bearish and it's just talking about the fundamentals, like they always do. But I thought this was interesting, right? So they're trying to explain GameStop's short interest exceeding 100%. What they said right here is, you know, how did the short interest get as high as it did with GameStop? How does it exceed 100%? And what they say is that the same shares are lent multiple times, right, by successive purchasers. Could they be doing that with AMC? Are the shares lent over and over and over, and that's why we don't see the real short interest? I don't know. Just an idea, guys. And yeah, so check this out. And again, and it appears the stock was sold short twice for the purpose of the short interest calculation. Ooh. Okay, so I don't really like these guys, right? I don't pay attention, but I wanted to show you guys this too. So they're talking about AMC doesn't have, you know, the short squeeze potential. That's what they're saying, right? So if we go here, I just want to point this out. I'll put the links in the description again, guys, if you guys want to check this out. This is like 10 signs of a short squeeze. So if you're closely following a stock because you're expecting a short squeeze, then you must absolutely follow the options chain, right? Here's the thing about options. Most small traders only buy calls or puts, okay? Their risk is limited to their investment. If they buy 10,000 in short-term calls and the stock plummets, they only lose 10,000. On the other side of that trade is the person who sold them the calls. Now, this is where the things get interesting. the person of the fund might not have owned the underlying asset to begin with. This means that instead of a covered call, it would have been a naked call, okay? Hedge funds and large banks write naked calls all the time. And I'm just reading this word for word, all right, guys? Naked calls are dangerous for small traders, but relatively safe for big fish because they have the firepower to control the stock price. It is completely legal for a large banker fund to sell a ton of naked calls and then destroy the share price by shorting the stock to death. It shouldn't be legal, but it is. This isn't like selling someone tokens that can be placed in a slot machine and then unplug the slot machine, right? The chance of winning is 0. Wall Street gets away with it because it is not an obvious unplugging a slot machine. It's just a slow bleed for a few weeks until the options expire worthless, guys, right? So I'm referring to this right here, right? Options, these expire worthless, guys. That's real money that they're making, right? Then the apes most likely are losing. Okay, so this is a pretty interesting, thing to read. A company, releases great news on Wednesday, Thursday, or Friday morning, right? And then it's all like for a reason, right, guys? Like these guys, it's basically saying that maybe, if they have a information that they received, right? So they might change their position based on that. Okay, so that's why you want to pay attention to the options chain, right? If you're expecting a short squeeze. Then we recommend closing your position, right? Oh, thanks for the heads up. It's already Wednesday, right? And then right here, be careful. Unless you know for sure what's going on behind the scenes, Fat Bob might have been long. He might have closed his position because he expects the stock to tank by Friday. Keep your eyes peeled, guys. Unusual options volume does not manifest in a vacuum. Someone is making a play. A lot of information there, guys, right? That's just what I wanted to point out, because if we look at the options chain right here, right, this is for this Friday. These are the ones that are, these are calls. So they were able to push, we were at what, 42 around that range. They were able to push all of these out of the money, guys. Okay, all of these out of the money. So these were in the money. Now they're out of the money, which means they're, if it's by Friday, right, if this price stays around the same price, those are going to expire worthless, guys. That's what sucks about options, right? Okay, that's all I got. I know that's a lot of information on AMC. That's all I got. So let's move on to Lucid here real quick. I got it pulled up, and we're just basically trading in this channel now, guys. It seems to be finding comfort here, right? So if you just by going by the chart, like we bounced off this support, and I'm on the 15-minute chart, guys, right? And then it got rejected, bounced, and now we're consolidating, so it's just going sideways. And the volume today was pretty normal, I would say. Nothing crazy, right? But it was up 2.58% and it closed at 52.44, okay? And it's down 0.42% in the after hours. And then we can just look at the order flow. So 12.95 versus 13.90, 549 versus 547, 425 versus 444. So it's kind of weird. There was a lot of outflow and it ended up bouncing right here, right? And it went back up. We can zoom in a little bit. And we saw strength here towards the close, okay? Just to show you what happened today. I don't have any new news articles for Lucid, okay? So we're just gonna jump over to this one, Bitfarms, okay? Sorry to keep it real short with Lucid, but it's just finding its price right now, okay? That's what the market is doing. And then let's see. Well, real quick, just to show what we expect tomorrow. So if we go, this might just be a huge like cup, right? Cup and handle. That's what it could play out to be. So if you're bullish, we want to go back up to this range right here. And if you're bearish, well, it's gonna go down and test this support, okay, most likely, right? So 50 is just a psychological level, and if it breaks down, our real next support line is around this $44 range, okay? So you would want to see a bounce off of that. All right, but like I said, I don't really have too much information today on Lucid, but we'll move on to Bitfarms, guys. So check this out. It was up 8%, a nice green day for sure. Reclaim that $8 support that we've been looking at right here, guys. Right, so this is why I love charting, guys. I can show you right here. I'm not a predictor. I don't know the future, none of that crazy stuff, right? Like I literally just chart out, what the chart is telling me, and we have found support, here before. So now we're going back to the upside, okay? And that's what we want to see. I definitely want to see it come back to 823. That's where it shows again a lot of support in this trading channel right here, okay? And yeah, so we'll go over the inflow was 1.18. So institutions, right, we're buying today. Not a lot of them were selling, 0.82. The medium was 11.01 versus 7.64. And then the small was 5.63 versus 5.04. Okay, so we want to continue this uptrend, right? And it looks like it's gonna test this and try to see if it can bounce off of that and find more strength there, which I think so. Again, Bitcoin's going up, crypto's going up, guys. Yeah, I mean, Green Day, you know, can't be mad at that. I don't have any news articles to go over with Bitfarms. Okay, so we're just waiting to see now what's gonna happen from here on. Okay, but if volume comes in, guys, again, like you always want to see high volume, and that's what can push it. Or if, you know, Bitcoin goes on a run, that's what's gonna push it. And then so next, let's just look over this Loopring chart. For the day, guys, it's sitting green, right? We're up 31%. Let's go. That's what I love to see, right? I held through this dip, through the madness, right? And now we're back up, baby. Like we're looking solid right here. And what I want to point out, right, is look at this volume. So 3.2 billion volume, guys. 200% volume increase. Okay, does somebody know something? I don't know, but the hype is there. Now the market cap's at 4.4. Remember, I'm looking at least, I want to say it's going to be a 10 billion market cap. Okay. And yeah, and then the circulating supply, which is the 97%. People are holding it for about 14 days. The week is also looking better now, right? So a lot of dips here, dip, bounce, and then it did exactly what I told you guys yesterday. Remember, I told you that if we broke this triangle, I see a wedge here, a triangle. There's the tip. We come back here. You know, I can't chart on here, but I'm trying to just, you know, outline it for you guys. And now we have this break. Okay, so that's bullish, guys. That means that we're gonna go test the all-time high, which is 383. All right, that's what I'm saying. You got 48% buys, 52% sells, and a lot of interesting things going on there. Now I'm just gonna point this out. Again, this is their official Twitter right here. If you want to follow them, over 3 billion traded on Loopring L2 with no gas fees, guys. 0 gas fees. That's huge because every single time you trade on most platforms, they're going to charge you some kind of fee, right? Now, here's the volume. And look at this. It's got major likes, retweets. It's going crazy, right? So if you want to check out their Twitter account, it's loopring.org, okay? And yeah, this is what I do, right? Go straight to the source. I collect the information, I bring it to you guys, and I try to bring the most current and valuable information that we got. Okay, shout out to all the new subscribers. Thank you for tuning in. You know, we're growing the family, guys. We're gonna keep it tight, right? So if you want to stay up to date with the information, you know, I got you. And thank you for hitting that subscribe button. And I hope you know have a great night and a relaxing one, right? And get everything planned out for Thanksgiving, because it's gonna be better than last year, right? For sure, right? We're in a better time and place right now, right? So thank you for tuning in. See you later.